Bitcoin just hit another all-time high, and your neighbor who knows nothing about crypto is suddenly giving investment advice. Over 106 million Americans now own cryptocurrency, yet most still think Bitcoin is just digital monopoly money. The truth is, we're witnessing the largest financial revolution since the invention of banking itself. And if you're still sitting on the sidelines, you're watching history unfold without understanding what's actually happening. Let's start with what Bitcoin actually is, because most explanations sound like they were written by robots. Bitcoin is digital money that no government, bank, or corporation can control or shut down. Think of it like digital gold, except it's easier to store, transfer, and verify than any precious metal. Every transaction gets recorded on a public ledger that's maintained by thousands of computers worldwide. This system, called blockchain, makes it virtually impossible to counterfeit or double spend Bitcoin. But here's where it gets interesting. Bitcoin was created by someone called Satoshi Nakamoto in 2008. Nobody knows who Satoshi really is, and they disappeared from the internet in 2011. They left behind a revolutionary system that's now worth over $1 trillion in total market value. The timing wasn't coincidental. Bitcoin launched right after the 2008 financial crisis. While banks were getting bailouts, Satoshi was building a system that couldn't be bailed out or shut down. The first Bitcoin block even contains a newspaper headline about bank bailouts. It was a direct middle finger to the traditional financial system that had just collapsed. Fast forward to today, and Bitcoin has survived every prediction of its death. It's been declared dead by mainstream media over 400 times since 2010. Yet it keeps coming back stronger, like a financial zombie that refuses to die. Each cycle brings new adopters, first tech nerds, then investors, now entire countries. El Salvador made Bitcoin legal tender in 2021, becoming the first country to do so. Their president, Nayib Bukele, has been buying Bitcoin for the national treasury ever since. Meanwhile, major corporations like Tesla, MicroStrategy, and Square have added Bitcoin to their balance sheets. MicroStrategy alone holds over 190,000 Bitcoin, worth billions at current prices. But the real game changer is institutional adoption from traditional finance. BlackRock, the world's largest asset manager, now offers a Bitcoin ETF to regular investors. This means your grandmother can buy Bitcoin through her regular brokerage account. Fidelity, JP Morgan, and Goldman Sachs all offer crypto services to their wealthy clients. The same banks that call Bitcoin a scam are now making billions from crypto trading. But Bitcoin isn't the only player in this space. There are thousands of other cryptocurrencies. Ethereum powers smart contracts and decentralized applications that run without intermediaries. Think of Ethereum like the iPhone of crypto. It's a platform where developers build apps. These apps can do everything from lending money to creating digital art that sells for millions. One digital artwork sold for $69 million at Christie's auction house in 2021. It was just a JPEG file, but it represented ownership on the Ethereum blockchain. This opened up entirely new markets for digital ownership and creative expression. Then there's DeFi, or decentralized finance, which lets people lend and borrow without banks. You can earn interest rates that make traditional savings accounts look like a joke. Some DeFi protocols offer returns that would make Wall Street traders jealous. Of course, with higher returns come higher risks. This isn't your grandpa's savings account. Crypto prices swing wildly, sometimes dropping 50% in a matter of weeks. Bitcoin hit nearly $69,000 in 2021, then crashed to around $16,000 in 2022. But long-term holders who didn't panic sell have been rewarded for their patience. Anyone who bought Bitcoin and held for 4 years has never lost money historically. The key is understanding that crypto operates in cycles. Just like traditional markets, every 4 years, Bitcoin goes through a halving event that reduces new supply. This scarcity mechanism has historically led to massive price increases over time. It's basic economics. When demand stays constant but supply decreases, prices tend to rise. But the real value isn't just in price speculation, it's in the technology itself. Blockchain technology is being adopted by major companies for supply chain tracking and data security. Walmart uses blockchain to track food from farm to shelf in minutes instead of weeks. This helps prevent foodborne illness outbreaks and reduces waste throughout the supply chain. Central banks worldwide are developing their own digital currencies using blockchain technology. China's digital yuan is already being tested in major cities across the country. The Federal Reserve is researching a digital dollar that could revolutionize American banking. This isn't about replacing cash. It's about creating programmable money with built-in smart contracts. Imagine money that automatically pays your bills or sends payments when certain conditions are met. Your salary could be programmed to automatically split between savings, investments, and expenses. This level of financial automation was impossible before blockchain technology existed, but with great power comes great responsibility and significant regulatory challenges ahead. Governments are still figuring out how to regulate something they don't fully understand. The SEC has been cracking down on crypto companies, creating uncertainty in the market. Meanwhile, other countries are embracing crypto innovation and attracting blockchain companies. Switzerland and Singapore have become crypto-friendly havens for innovative financial companies. The regulatory landscape will ultimately determine which countries benefit most from this technological revolution. For individual investors, the question isn't whether crypto will survive, it's how much exposure you want. Financial advisors now recommend 5 to 10% crypto allocation for most investment portfolios. This isn't about getting rich quick, it's about participating in the future of money. Whether you're buying your first Bitcoin or building the next blockchain application, you're part of history. The internet changed how we communicate and share information across the globe. Blockchain is changing how we store value and transfer wealth without intermediaries. We're still in the early stages of this transformation, like the internet in 1995. The next decade will determine who adapts to this new financial reality and who gets left behind.